If you're not aware, one of the streams of income that I have is from real estate investing. And today is a good day. Today is the real estate investing payday. And a lot of you mentioned, hey Clay, I'm interested in this real estate stuff that you do. So I'm gonna take you along with me to get paid. And along the way, I'm just gonna explain what I do in the real estate market and just kind of how it all works. And don't wanna forget this. I'll explain this in a little bit because yeah, real estate is great, but there's definitely some headaches that come along with it. So let's go get paid. So let's talk some real estate. First thing first, I gotta try not to hit anything as I back out. That's the most important thing here. Or else all this paycheck's gonna go to paying for something that could have been avoided. So the very key thing about real estate, just like trading or many things, is there are all kinds of ways to do it. There is no holy grail. There is no precise manner. Now sure, you can be an idiot about real estate just like you can be an idiot in trading or other areas of life. But in a broad sense, there's all sorts of ways that you can go about it. So when I talk about what I'm doing, by no means is this the only way to do it. The holy grail, anything of that nature where, hey, you have to do it this way or else you're going to fail. That's not it at all. It all depends on what sort of capital you're working with, what sort of goals you have, and really just your schedule. For me, as an example, I trade, I have, the education business and, other things going on. So I'm not somebody that, wants to be involved in real estate 8 hours a day, or heck, even 3 or 2 hours, or even an hour a day. My goal with real estate is passive income, meaning there is money flowing into my bank account every month, and I really haven't done anything for it. And with that, the way I have it structured is I have somebody that works for me that handles all the payments. So if people aren't paying, she's tracking them down, and the only time I really ever get involved is if I need to start emailing with our attorneys that deal with taking back the house and all that sort of stuff. So for me, it's very, very hands off, unless I'm actively seeking a deal or trying to get a house resold or sold again. But for the most part, this is all passive because that's what I want. You can definitely get in the trenches and make it a lot more intense in terms of flipping and being a lot more involved, wholesaling, lots of different avenues to go, but this is just the avenue that I do. So what do? I do what is called seller financing. Another term you may have heard of is a land contract. That's what they're called here in Michigan. But contract for deed, that would be another term for it. But seller financing is kind of that umbrella term, and that's what I do. And for me, it just makes sense and gives me, I think, the most peace of mind and the least amount of headaches. Although, as is the case with anything, there's going to be trade-offs. So first off, what is seller financing? Well, seller financing is basically I get to play the role of the bank. If you were to go to a bank because you want to buy a house, the bank's got to approve you. The bank's going to tell you, well, this is what interest rate we can give you. These are the terms of the loan. So, just like any bank, whether that's Bank of America, Chase, Wells Fargo, any bank, that's just what they're going to do if you want to get a loan from them. They're going to outline, they're going to run the credit check on you, figure out if they want to loan you money, and then set all of that. But in seller financing and real estate, I am the bank. Meaning I purchase a house, fix it up, and then I look to sell it like a bank looks to sell it. But the difference here is that they are not actually gaining full control of the house until they pay me off. Meaning I own the note, I own the mortgage, or in this case, the land contract. But don't get confused with all the details. Just understand that I get to play the role of a bank. So in this case, these people, I bought a house and then I put it up for the market for sale. And I told them, if you would like to buy this house from me, the price is going to be $57,500. And they applied, and I say applied because I have to run all the background. Well, I don't necessarily do it. I have a guy that I work with that does all that stuff, which reminds me, relationships in real estate, very, very important. Get out there and network if you want to do real estate. Super important. I'll get to that in a second. But these people come to me, and I asked this guy, Justin is his name, So what do you think? So he does backgrounds, he does credit checks, he does all that sort of stuff, and at the end of the day, he says, yeah, you know what? They are worthy, to get, to form a little business relationship with and to, sell them this house. Now, the one thing about seller financing is I am dealing with high risk individuals. People that come to me are those that can't get approved through a traditional bank. So from a personal financing, kind of perspective, and why it's so important to keep your credit good, to pay attention to things and not ruin your credit, is as soon as you become high risk, the normal bank is not going to work with you. And then you have to come and work with somebody like me that is willing to take on a higher risk person. But with the higher risk, I need a higher reward. That's just common sense. High risk, you should be getting high reward. So what does that mean for me? That means I'm going to get a good solid interest rate on it. So in this example, like I said, 57.5 is what they paid, or what the deal was sold for, and they put $5,000 down. And I'll circle back to that in a second, which is why it's, what makes things so important. But then with that, they paid a 7.5% interest rate. And right now on the screen, you can see kind of all the details of the deal. I realize it said 57.5 and you only see 52.5, but keep in mind they put down a $5,000 down payment, just like if you went to a normal bank, you would put down a down payment too. So they put down $5,000 with me, which is non-refundable. It is what it is. And then on the balance of 52.5, they owed me 7.5% interest. That was their mortgage rate in a sense. If you're thinking, what? That seems super high. Yeah, exactly. They are considered a high risk person. So because they're high risk, they are going, to be paying. I am taking on risk, so I need a higher reward for that risk. And really, 7.5% is at the lower end. I own, I think right now, 11 or 12. I can't remember. But this is 7.5% at the lower end of the interest rates that I collect. But point being, over the past several years, this one started in 2012, I've been getting 7.5% interest on this money. So for you stock players out there, just look at that 7.5% interest as like a dividend yield. That has been my dividend yield on this stock, if you will. But the stock is actually the piece of property. Now, the awesome thing about real estate, and where it kills the stock market every single time, is that in the stock market, if a stock goes to zero, it is what it is. That's the worst case scenario. That it just you lose it all. In real estate, the worst case scenario is these people stop paying me, and they just know we're not going to pay you anymore. Well, in this case, because I have a physical asset, aka the house itself, I can say, fine, you're not going to pay me. I am taking back the house, and I will just resell it again. So real estate, you always have that physical asset. You have collateral, physical collateral. In the stock market, that's just not the case. You have a piece of paper, it's a stock, and in a worst case scenario, you could potentially lose it all. Now, I don't have anything against the stock market. I trade it, I invest in it. So it's all about diversifying. But that is the one cool thing about real estate, is the physical collateral that you have. So in a worst case scenario, it's a hassle. You have to work with the attorneys and you got to wait periods of time. So that can be a bit of a headache. But at the end of the day, you are going to get money back, or you are going to get, the piece of collateral, which you can then sell, resell again, or do whatever you want, and, recoup your cost. So that is what I'm doing. Just seller financing. You buy them cheap. You got to fix. You want the ugly house. You buy the ugly house. You fix it up, and in this case, sell it for seller finance. Now, wait, what's the difference between this and a rental? Well, a rental, for example, if they want to paint a room hot, bright pink, they can't do that. You're not allowed to do that to a rental. In my case, with a land contract with seller finance, they can do that. I could have a house that, if I have to take one back, it could be all weird colors inside, because they can do whatever they want. On the flip side, in a rental, if a plumbing pipe bursts at 3 a.m. in the morning, they're going to call the landlord. With this case, though, they are not calling me. If they're allowed to paint, rooms whatever color, well, then maintenance is on them. So that is one of the big distinctions that I like, is I don't want to have to worry about all that sort of stuff. I'd rather just you deal with it, and that's what a land contract allows. The other cool thing is the down payment. Yeah, a rental can have somewhat of a safety, or a deposit that can be refunded and all that, but with a land contract, right off the bat for this particular deal, $5,000 in my pocket. And then from their perspective, they just paid me $5,000. So if that's not motivation for them to want to pay me, I don't know what is. I mean, unless people just like to throw $5,000 into the wind. So from a psychological and motivational factor, I really like the fact that with land contracts, you can get bigger down payments. Because again, I'm the bank, I can dictate the down payment. I could have said I want $10,000 down, but $5,000 for this, that worked out fine. But as the bank, I can dictate all those things, and that is non-refundable. So if they want to give me $5,000, pay for 6 months, and then just decide to stop paying, well, they just paid me not only 6 months worth of payments, but also that $5,000. So it's a great way to mitigate risk and hedge risk just in case, because it is a high risk game, because these people were not approved by the banks. And the final note on that part, yeah, it's high risk, but you can't just accept anybody, or else you're going to have all sorts of headaches. So you still got to do credit checks, background checks, and just kind of understand what's going on that didn't exactly allow them, to get, a traditional loan. So the next thing here is really the big trade-off with a rental and seller finance is seller finance. They can actually buy the house and take possession of the house, which is what's happening here. Now, sure, I'm going to get a nice payday from it, but now next month, they are not sending me the money anymore. So my passive income is now done as far as this property is concerned. Whereas a rental, yeah, you have some headaches and things, but it's yours. There's no way they can buy you out in a sense. But in this case, I've been bought out, so I am losing the property out of my portfolio. Maybe you're thinking, oh, that's the dumbest thing you could have done, Clay. Yeah, maybe, but in my mind, that's where it's all about different strategy, different perspective. I still have other properties, but that is kind of the downside here is I am now losing this property out of my portfolio because I'm being bought out. Now I'm being bought out, and with the way the numbers have worked, I'll be just fine. And from a rental perspective, it would have taken quite a while for those rental payments to catch up with what this buyout price is for me. But to be fair to the people that want to just do rentals and be landlords, yeah, I am losing the property out of my portfolio. So it's give and takes, it's pros and cons, and that's kind of what you have to determine. Fun fact about this one, and this is going back to the whole relationship thing, there's 2 properties in my portfolio that I've never seen, I've never been to, literally, because I just trusted the contact that I built a relationship with, and this is one of them. I've seen pictures of it, but I've never physically been to this location. I've never physically been inside of this property, never once. But again, the guy that I built the relationship with, I trust him, he's a good guy, and he said, hey Clay, here are the numbers. And what happened was I bought it from him, and it was already pretty much pre-sold. So that's why that interest rate's a little bit lower, because there wasn't really much that I had to do on my end. Yeah, sight unseen, I bought it just from some pictures. The guy said, here are the numbers, here's the buyer, good qualified buyer, which he was, because hey, now I'm being bought out about 5.5 years later. And so it just really goes to show the power of relationships and establishing a good understanding, a good trust with people, because it's a give and take in real estate, and that's what real estate's all about. Win-win deals for everybody. So this person bought the house cheaper than what they sold it to me, but then I sold it for more than what I bought it for them. It was a good buyer. I didn't have to go through the whole trying to sell it and finding a buyer. So it was just a good relationship that was put together. But yeah, it's still kind of crazy to think about. Usually when I tell people that, they look at me like, you did what? You bought a house with never even seen it? Well, yeah, I have, and it's worked out just fine. So we are almost, I think I've covered everything, but if you have any questions, definitely leave those in the comment section below. But we are getting close to the title company here. So we'll go and, oh, that reminds me, I still got to talk about, because right now you're probably thinking, oh, wow, real estate's awesome. Yeah, there's some headaches, and there are definitely some headaches that happened with this one. So let me get parked, and then I'll quickly go over kind of the headaches that came along with this deal. All right, we are parked, and I want to go over kind of the headache thing just so you have a full disclosure. But with the way this one worked is, there was a document that was needed, and this document had been submitted to the county, and then they get back and say, oh, well, sometimes, the county misplaces things. And the kicker here, though, was that my dad was a part of this deal in a way, but that maybe I'll talk about private money lending in another video. But he was part of the deal, but my dad's down in Ohio. And it was a matter of, okay, well, we need this and, you know, all this to close, blah, blah, blah. But we need this document and the county's misplaced it. Well, yeah, but in real estate, it's not like you just go and sign a piece of paper. You got to get things notarized, and, you know, that you usually need a bank for that. So, you know, the title company who's working with, you know, the bank to do this whole, you know, buyout deal. It's actually a refinance from that perspective, but I don't want to confuse things. Just look at it as a buyout. So the piece of paper in this buyout is needed. And again, my dad's in Ohio, so, you know, we're going back and forth. Well, where is it? I don't know where it is. You know, I'm digging through all my paperwork. I never got it back. I've done 4 of these certain things, and I have 3 of the 4 back. So, you know, it's kind of one of those things where you only notice you don't have it once you actually need it. So, all right, well, just have your dad can come in and, you know, sign. Well, no, my dad's in Ohio. I'm not going to have him drive all the way up here for that. Okay, well, it can be notarized. You know, can you have him, you know, I said, all right, well, why don't I just email him a document. To be fair to the title company, you know, we'll prepare him something and then you can email it to him. Okay, fine. Okay, and make sure he prints it out on legal paper, which is like paper that's a little bit longer than normal. And when he prints it out, you know, it's got to be that, or else the county's not going to accept it. And yeah, that's fine. So I reply back, I'm like, listen, I'm not going to send my dad on a wild goose hunt for one piece of legal paper because the county that I live in doesn't know what they're doing and misplaced stuff. That doesn't make, no, I'm not going to do that. So for one piece of legal, okay. So to be fair, they're like, all right, well, we'll overnight it to your dad down in Ohio, and then we'll pay, you know, for the postage to have it back up. But luckily, my dad was actually in town, you know, last week, so they needed it. They mailed it down to him, and then, you know, he got it and gave it to me. So I got the piece of paper, but just little stupid things like that, you know, are just part of real estate. And it's just, wait, thank you, county, for misplacing. And then the title company. I mean, really, you want my dad to go find one piece of legal paper, print it out, and then he's got to go to a bank and go notarize? It was just a pretty big headache. So we got everything, though, I think. I got the paper. I got my ID to prove who I am. And then I have to sign a couple of pieces of papers, and then they'll hand me the check. So I think I have everything, but now it's just a matter of heading into the title company. And, I should note, some states are different. Some states, Michigan, one of them, we can use title companies, but they're basically the same as like a real estate attorney. But I know some states, you almost have to use a real estate attorney to do the closing and paperwork. But in this case, in Michigan, title companies, you know, make it work. So I'm going to go get these papers signed. And next time you see me, I should have a nice check in my hands. All right, I got the check. Final thing, let's go to the bank and deposit this. And with that, the money has been deposited. There's the deposit slip there. So mission complete. As far as future real estate videos, I'm just going to use that like button as a gauge. If this thing has barely any likes, then, you know, I'll just take it. Maybe real estate videos, not that many people are interested. But if you enjoyed the video and you want to hear more about the real estate, then the easiest way to communicate that to me is to click that like button. So do that. Make sure to subscribe to the channel. And, you know, I'll try to do some more stuff if there is interest. So hopefully you found this helpful. Ask questions below to an extent, but, you know, time is limited, so I can't exactly put together a real estate course in the comments section. But just basic questions, I'll do my best to answer those. But who knows, if there is enough interest, maybe I could put together some sort of real estate course, kind of how I go about things. So I guess this video will be a good kind of way to test the waters and see just how much interest amongst, you know, the community and those of you just passing through on YouTube have with real estate, and I'll kind of play it by ear. But thank you for coming along with Nate and I on our journey. And yeah, your paychecks can be very nice in real estate, but you know, it's something where you definitely got to learn how to go about things before you get into these waters, because you know, the numbers can get pretty big, but that's also to the downside too. So just something I want to end with is you know, take this serious, and you know, definitely get educated before you get involved too deep in any sort of real estate investing.